morning. You're watching Business World Live. I'm Danny Laurel. It's the start of a new trading week. Let's go straight to our top story. BDO is still under fire for the alleged hacking of its banking system over the weekend, where dozens of customers lost thousands of pesos. The Banco Central has already vowed to look into this incident. Pamela Vasquez has the rest of this story.
BDO, the country's largest bank, says it's continuing to investigate the alleged hacking of many of its customers' online accounts. Over the weekend, social media blew up with people complaining that they lost between 50 to 100,000 pesos, with many of the illegal transactions being done while they were asleep. One of the victims is AR, who is an OFW in Dubai. AR was alarmed when he received an email from BDO saying his account's password was successfully changed.
While tumatawag yung sister ko sa hotline, nag-notify sa akin, bumawas ng 50,000. Bibili sana kami ng lupa eh. Hindi nga lang matuloy-tuloy kasi nga kulang pa. Lalong hindi matutuloy.
AR added that another 50,000 pesos was transferred to a certain Ramon Joseph Matas BPI account, which they think is a fake name. Another bogus account that emerged was Mark Nagoyo, who apparently has multiple Union Bank accounts. Nagoyo means to fool someone in Filipino. Victims have created a Facebook group called Mark Nagoyo BDO Hacked, which now has more than 3,000 members. Another victim is 26-year-old part-time professor Christine Pagirigan, who says she lost 20,000 pesos.
Yung initial reaction ko talaga was, this is another scam or this is another attempt para mang-asar or whatever.
Both AR and Christine were shocked that the cyber criminals were able to get the one-time password even though they didn't share it or click on any phishing links.
That made me a little bit curious na parang hindi ako nagkulang on my side pero bakit may breach of security, and it was a hard-earned money kaya nakakapanghina siya.
O paano nila nagawang makapag-transfer ng walang verification na nanggagaling sa owner? Samantala nang tumatawag kami for blocking ng card namin, ang daming tanong, ang daming question.
BDO said it's been made aware of a sophisticated fraud technique and that it has put in additional security controls to block further attempts. It also promised to give back the stolen funds. Manila Bulletin first reported that the hackers transferred the stolen money to Union Bank accounts and bought Bitcoin with them. Bangko Sentral Governor Ben Jokno, for his part, says they're already coordinating with concerned banks to find out what happened and to ensure that victims will be reimbursed. Jokno added that the BSP is committed to uphold the safety and integrity of the country's financial system. Mobile journalist Pamela Vasquez, We Are One News.
The Banco Central is widely expected to keep policy rates at a record low, that is this week. Now, all 15 analysts in a Businessworld poll said they expect the Monetary Board to maintain the same benchmark rates it hasn't touched since December of 2020. Analysts believe the emergency of the new and possibly more transmissible Omicron variant strengthened the bank's resolve to retain its accommodative policy setting. Recall that the Philippines already tightened its borders and restricted arrivals from countries where Omicron has been detected. That's why many are expecting the BSP to keep supporting the economy amid the uncertainty brought about by Omicron. Now, still on interest rates, it's not just the BSP having a meeting this week. In fact, it's central bank watch all over the world. 20 central banks are due to hold meetings this week. You've also got the Fed. The US saw its highest inflation since 1982. The European Central Bank and the Bank of England also. And these decisions, of course, have the potential to stir market swings. This, as everyone is watching the spread of the Omicron variant, you've got UK Prime Minister Boris Johnson warning the UK faces a tidal wave of infections from the variant, and you can see how the Philippines is nevertheless lagging behind the rest of ASEAN in the race to vaccinate and of course even provide booster shots in anticipation of that spread here in the region. Now let's take a look at how we are opening quite happily above 7,200 here, up by 0.2%. And this following what analysts had already predicted, shares may be rebounding this week ahead of that BSP meeting, and of course as cases have still stayed low. This according to Papa Securities Manny Cruz. He thinks that the index will stay above the key 7,000 level. Let's take a look at how our banks are doing this morning. Of course, on the back of those fraudulent attacks on BDO customers, transferring them to Union Bank accounts. And you can see those two banks clearly the biggest laggard today, particularly Union Bank, heavily sold off. That's down by 2.4%. Union Bank, very well known to be a digital focused bank. BDO, our country's largest lender, down by 1.13%. Now let's take a look at Jollibee this morning. This as they continue on that trend to expand overseas. However, they're down by 7 pesos. That's a hefty 3%. This as they've actually said that they're set to open in Scotland and Kuala Lumpur. They plan to have 120 stores in Malaysia within the next 10 years and will be opening its 150th store in Vietnam in early 2022. They are now in 34 countries, more than 5,800 stores, wholly owned brands plus other franchise brands, and of course they also own the Coffee Bean franchise, and they have ownership in Superfoods Group. Now back to the boards. Here to talk about what the market indicators are telling us, we have Ron Acoba. He is the founder and chief investment strategist of Trading Edge. Happy Monday, Ron, and welcome back.
Good morning, Danny. Thank you for having me.
Ron, let's take a quick peek at our index first before anything else. What are the charts telling us right now? We're above 7,200 levels. This after we had slid below 7,000 on those early fears of Omicron. Is this totally sentiment driven? Does this have anything to do with our low number of cases, or is this really fundamentally driven by a real recovery in the economy?
Well, presently the index is at an impasse. After reaching a high of 7.4 in the previous weeks, it slid to a low of 6.9 before rebounding to around 7.2 at present score. So in the near term, I expect the index to continue to chug down and rebase before it can reclaim its recent high of 7.4 or even aim for its key resistance at 7.6. Much of the drag that we saw in the past, at least in the past 2 weeks, was actually sentiment driven. As you've mentioned, our rally was actually capped by fears that the new variant, Omicron variant, would derail the ongoing global recovery. Second, and another catalyst that was actually weighing on the market, at least in the previous week, was the expectation that the Fed would step up their tightening process, and it's actually becoming more of a possibility now that the U.S. recently reported a surge or a jump in domestic in their headline inflation, reaching a high of 6.8, the highest in 32 years, if I'm not mistaken, and it also marks a ninth consecutive month that their inflation on their end stayed above their central bank's target of 2 to 4% target band. So if inflation in the U.S. Remain at elevated levels, especially with the upcoming Fed meeting this coming week, we could be in for another round of volatility.
Okay, very interesting. Let's parse through what you've mentioned here. Is there a repricing because of Omicron when it comes to the PE ratios, for example? And you mentioned the resistance level. We won't, we'll be hitting the 74. Is that because investors are already saying, okay, that maybe our earnings targets might not be met, perhaps not
Yeah.
this year,
Well,
maybe
well,
in the next 12 months.
Well, obviously, at least for now, it's actually a good thing that the government is being proactive into addressing the Omicron threat, closing borders with the countries where Omicron was detected. But obviously, these proactive measures would actually dent earnings in general, because in a way you're somewhat closing the economy. So prior to the Omicron threat, we're actually on path to recovery already. I believe the index would have already reached or even surpassed 7.6 had not the Omicron
Okay.
came to our shores or came to be. So yes, in a way, there's a bit of repricing because much of these earnings expectations would have to be delayed because of the measures that are being implemented to address this particular Omicron threat.
What about support levels, Ron? You can see, I think when we hit just below 7,000, we quickly naman bounce
Yeah.
back. There's a lot of, bargain hunting here.
Mm.
Is that a clear support level? Is
The
there a clear psychological level at 7,000?
the key support, as you've mentioned, is the 7,000 level because it was actually the pivot level of a supposed
Mm.
bullish reversal that would launch the index initially or supposedly towards 7.6 or beyond had not the Omicron variant came to be. So at least it's a good thing that the index is holding above 7,000. So that's a level that we're really watching, because if we fall below that, we could be in for another drawdown, perhaps to around 6.6 or 6.6 or 6.5. The resistance, the near term, is the present is the recent high of 7.74.
Mm. What about the year-end rally, the Christmas rally? Is there still
Mhm.
space for that? If let's say things stay the same, at least
If
for the
things,
next
yes,
couple of
well,
weeks?
definitely, well, we're looking at that. For example, if the Fed stays mum, despite the
Okay.
increase in their domestic inflation number, then investors globally would actually see it as a more chance for them to take risk in general. So that would actually fuel a Christmas rally, as you would say. And on another note, we are actually heading into 2022,
Mhm.
a year that is important for us because we're gonna have our presidential election. So in terms of spending across the board, then that would actually be a key driver, not just for the economy but market prices in general.
When we take a look at our performance year to date compared to other Asian markets, compared to the US, for example, where are we? Did we finally catch up? We were the laggards of 2020. Did we finally manage to, because of the vaccine story, perhaps, because
We're,
of the
we
reopening of
remain to Well, at least we're no longer a laggard, but we remain to be in the middle of the pack region wise. Of course, the leaders were the likes of the Vietnamese bourse, which are, despite all of these things, are already trading at new highs.
Mm.
Relative to how the US are performing, obviously we are very way behind because despite all of these um, Fed tapering talks, despite of this Omicron threats, they are still trading at new highs, while the index is still at 7.2, way behind our pre-pandemic high of around 9,000. So there we are.
Okay, how much of this is because of the net foreign selling, or lack of net foreign buying? And what's the catalyst that would bring them back to the Philippine markets?
Well, the important catalyst would essentially be growth, earnings growth, not necessarily economic growth, but earnings growth. Philippines was heavily hampered by the pandemic, precisely because it's a consumption driven economy. 70+% was consumption was driven by the economy. So companies were heavily hit, compared to that, to the likes of Indonesia, compared to the likes of Thailand, Vietnam. They're not really that much dependent on consumption as we are.
Mhm.
So what we need to see moving forward, and what global investors need to see moving forward, is the recovery in earnings growth. Not just recovery, but sustained double digit growth. Previously, prior to, let's say, 2017, 2018, global investors were actually paying us at a premium. If you remember, for the longest time, the Philippines was trading at a PE of somewhere between 19 to 22 times PE, which is at the high end relative to the region. So it basically suggests that global investors are paying us high because of the fact that we are growing back then. So
Mm.
that's what we need to see moving forward.
Okay, let's focus, Ron, on the banks. Give us your input here. Of course, they're in focus because of these, fraudulent transactions
Mm.
by BDO and Union Bank. But just as a whole, it hasn't, recovered. It doesn't seem to have recovered. We
Well,
don't seem to see, at least when it comes to the share price. What's going on?
well, well, relative to pre-pandemic levels, yes, but actually, if looking at the charts of, let's say, BDO, Metrobank, and BPI, to some degree, China Bank, and to some degree, Security Bank. Actually, they were actually in the process of pivoting from key bases already before the Omicron threat hit. So, as I was saying, I actually think that we are on path to a full recovery already, with cyclicals like banks finally carrying us towards higher grounds. It's just unfortunate that at these threats came to be, and that's why we're back where we are. So for us to be on that path again, I think we need to rebase again a period of at least short consolidation for us to gather enough momentum to head higher once again.
Difficult question, but it's now the time to be entering these oversold banks because of these issues.
I would think I would think yes. I would think yes, because if we are expecting recovery in general, not just for the coming year, but for the entire cycle for the next 3 to 5 years, then it's logical to think that banks would be there recovering as well, right? As you've mentioned, they haven't really recovered yet. So if we're looking down the line, then yes, it's actually a good time, a good opportunity to pick up these banks.
Okay, and hopefully, as the BSP had promised, these would be
Mm,
quickly resolved and
mm,
hopefully strengthen them even further. And finally, just quick question on the Medline's IPO. Why did that crash? They mentioned they were 2 times oversubscribed.
mm.
It is a health company, which you would think would be a defensive play.
I I
Tell us.
think it's a matter of the price action failing to meet the expectations of retail traders, because, as you know, much of this smaller IPOs are really backed by small traders that are not really looking at fundamentals, not really looking at outlook and the like. Obviously, Medellines came at the heels of Aldi, which hit the ceiling on its previous day. So from that end, you could argue that retail traders are expecting that there was a possibility that, as small as Medellin was, it could also be easily be brought up to ceiling. But the way that I observed, because I was watching how the bid and ask were doing before the 9:30
Right.
market trading start during that day. Initially, there were heavy bids at ceiling price of 3.45, amounting to 30 plus million shares, posted at 3.45, which was the ceiling at that. And then there wasn't really a significant selling action, but as the time started to tick closer to the opening bell, you'd notice that the bids startedly went away. I was actually one of those who pulled out my
Out. Okay.
bid because of the fact that I saw no support for the stock, because so I
Mm.
think it failed to to come to the expectation of retail traders that it would open strong, and they were just forced to sell, simply as that.
Okay, very interesting insights there. And as you mentioned, quite some volatility
Mhm.
ahead, but hoping, as you mentioned, that we would stay with that 7,000 support levels firming up this week. Thank you so much, Ron Acoba, Trading Edge.
Thank you, Dan.
Here are other headlines. We're keeping our eyes on the national government debt payments has already breached the 1 trillion peso mark in the 10 months to October. This as the government settled about 89 billion pesos in debt payments for the month of October alone. Preliminary data from the Bureau of Treasury showed the October debt service bill increased over 3 times from the 27 billion pesos it paid during the same month in 2020. Now, for the first 10 months of 2021, the debt service bill jumped by 22% to around 1 trillion pesos from the 861 billion pesos in the same period of 2020. Bulk of the payments in October went to amortization, which ballooned to 57 billion pesos from just 5 billion pesos a year ago. Interest payments also grew to 31.5 billion pesos. Now, renewable energy companies are weighing their participation in the Green Energy Auction Program, or the GEAP. This after the Energy Department finally launched the rules governing the program after a lengthy delay. The GEAP is a new market development support program. It aims to promote renewable energy as one of the country's primary sources of energy through competitive selection of RE facilities. This policy allows qualified participants from on-grid areas that generate power from biomass, wind, solar, hydro, ocean, geothermal, and waste to energy. But the program has already been delayed for 5 months from its initial target launch in June. And that's a first look into the business day. Today is Monday, December 13, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.